Good evening, all of you.
Good evening, sir.
Good evening, good evening. We'll start in 1 or 2 minutes time.
Good evening, sir.
Good evening, good evening.
Good evening.
Good evening. Right. So retail banking, we are doing it today. It is one of the easiest subject among the 4 subjects what we have, right? So not big problem, high scoreable subjects. Okay. Very, very easy and not big things. It is more of, the branch banking. Easy to do that. Okay. 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 So we will go one by one. The first one is 1 second. So reaction whiteboard. So we are stop recording. We are recording this session, right? Okay. Read Amazon. Okay. So retail banking, there are 4, 5 chapters. Very important chapters we have. Otherwise, it's all more of easy one, right? Not much of calculations will be there. 10 or 15 questions, the sums will come, right? But you can easily manage these sums. Right. Today we are going to talk about retail banking introductions. Very easy one, which we are going to do that. Okay. Just give me a minute. I'm opening that chapters. Okay. So I will present the screen. All of you able to see the screen?
Yes, sir.
Right. So retail banking introduction. That is the first chapter what we have. right? So the banking facilities targeted at individual customers, that is called retail banking. Okay. And it is focused on mass segment, covering large populations, different liability, asset, plethora of product, extended to small and medium-sized businesses. There are certain constraints to retail banking businesses, right? Problem in managing large client IT system are not sufficiently robust. Rapid evaluation of product. You have a different products are coming in. Cost of maintaining a branch network. Basically, it is happening through a branch network is very difficult. Higher delinquencies, all are there. Right. So retail banking, basically, it is called branch banking. It is called branch banking. And it is for individual firms. I will give you that the source. One second. The retail banking network. The structure of retail banking. Structure of retail banking segments. Where it is, basically. So which are all the customers where we have, right? It is right. All of you able to see the picture? All right.
Yes,
Here
sir.
we have individual firms, mass banking, class retail banking, agriculture, MSME. MSME means micro, small, medium enterprises. MSME means micro, small, medium enterprises. Okay. That is where the retail banking comes in. Right. The retail banking is also known as consumer banking. Right. Retail banking also known as consumer banking. Okay. And it is also called as a branch banking. It provides services, financial services to individual consumers. Right. Retail banking, it also operates through the branches, right? Lend money to the customer, right? All these things. So you'll say a retail banking is also called as branch banking, and or we can put or consumer banking, because it deals with end customer. Okay. That is what it deals with. Right. The characteristics of retail banking, it facilitates to the individual customers, meet the need of large number of customers. It offers multiple product, all these things. They also given how the retail banking is evaluated and over the period of a year, right? And all these things. Now we will see what is the challenges for retail banking. Challenges for retail banking. Consumer protection. And pricing. It is very difficult because, that every customer is important. the bank has got a, for example, minimum balance to be maintained. If they don't maintain the minimum balance, you charge. But how much you will charge, right? So that's a problem. Customers are not conducting any transaction. They will not maintain a minimum balance. All these things are a problem. Inadequacy of MIS. MIS means management information system. Inadequacy of MIS. There is no proper MIS will be there. That is called inadequacy of MIS. Understanding of KYC AML issues. Inadequacy. Understanding of KYC and AML. Right? We will have managing risk. That is also is there. Large number of customer bases. All these things. Large number of customer base. But in spite of all these challenges, retail banking grows. The reason for retail banking growth. Okay. So we will say huge, large number of youth bankable population. What is bankable population? They can able to bank with them. Populations. Right? That is very important. A lot of people who has got a lot of money. Right? GDP is growing, economy is growing, and financial market reforms. India is emerging economy, emerging or developing economy. Right. Financial market reforms. You have got a lot of new products, huh? Right. Then mass market banking, volume driven businesses, technology, right? Technology. We can say growth of technology or growth of technology in banking sector. Okay. Now we have internet banking. We have internet banking, mobile banking, ATM, etc., etc. So these are all the advantage, right? The reason for change in consumer preferences, decrease in interest rate. That is also a one reason. Decrease in interest rate. Uh, payment innovations. Interest rate, payment innovations. What is payment innovation? You have a UPI. What is UPI? Any idea?
Unified Payment Interface.
Unified payment interface. Okay. Artificial intelligence. Easy. Right? 24/7 you can transfer funds. Okay. 24/7. Digital banking. UPI, mobile wallets, internet banking solutions. Right? All these things are there. Artificial intelligence comes into the picture. Rapid adoption of blockchain by retail bankers. What is blockchain? I will also give you the examples of blockchain or definition of blockchain. right? Business to business or peer to peer areas, there will be a lot of problem. So blockchain, which will help us to solve the challenges by offering faster transaction time, more transparency. First, I will give you what is meant by blockchain, then we will see. Blockchain technology in bank. All right. It's a banking revolution by building decentralized database of digital and unique asset through a distributed ledger. That is called blockchain technology. Right, it's a banking revolutions. The system by building decentralized database digital of unique asset. Easy to operate. That is what we were saying it. Right. Faster transaction times, more transparency, lower cost. So these are all the advantages of blockchain technology. Okay. Blockchain records and validate every transactions. Blockchain does not require third-party authorization. Blockchain does not require third-party authorization. It goes automatically. Does not require third party. It is easy. It is decentralized. Okay. So these are all the advantages of blockchain technology. Artificial intelligence also is come into the picture. Artificial intelligence means, the machine will do everything. You train the machine to do its things, right? It will help us for fraud detections, anomaly detection, risk management, algorithm trading, etc. Okay. Right. Is that clear to all of us? So, retail banking means mass banking. Retail banking means mass banking. Retail banking means branch banking. Retail banking means consumer banking. It deals with large number of customers. There will be a lot of advantage for retail banking, right? So that is what we have learned. Okay, just give me a minute. Right. Okay. Now we will move on to second chapter, retail banking with a role in banking operation. Now we will see business model. It is a very small chapter. Retail banking, role within the bank operation. That is what the unit 2 talks about.
Screen is not visible, sir.
No, give me a minute. I have to present the screen. Right. Are you able to see the screen?
Yes, sir.
Hello?
Yes, sir.
Yes,
Right.
sir.
Right. Again, repetition of same picture. Whatever we have seen in the right. Let it be there. The retail banking deals with individual, right? Firms. Firms means corporate, or small corporate, you can say. Okay. Right. They will have a SBU. SBU means strategic business unit, retail banking. They will also have a departmental approach. Okay. Strategic business model or departmental approach or integrated approach. Right? We'll say retail banking models. Okay. Okay. So retail banking models, every bank has got a different model. Strategic business unit means it's a separate business unit where deals with all the branches of retail banking. Departmental approach means you will have a separate department of retail banking, or integration means it will have a combination of both the things. Okay. And let's see what are all the retail banking products dealt by bank. Deposits, loans and advances, and other services. Deposits means fixed deposit, savings account, current account, NRI account, corporate salary, demat account, minor account. Then you have a loans and advances, housing loan, personal loan, vehicle loan, professional loan, loan against shares, right? And then you have a credit card, debit card, net banking, mobile banking, Apart from that, third party product also which will be there. Something like, mutual fund, insurance, demat account. Okay. Right. So this is what is a simple chapter. Not big thing is there. Here, this particular chapter, what you need to remember is the models. There are 3 models. Department, strategic business unit. That is what you need to remember. Or integrated model. Okay. Just give me a minute. So we'll be moving on to third chapter. These all easy, small, simple chapters. Just to go through this. The notes, whatever I have given it, is more than sufficient. In the book also, it's not big things are there. In CIB, we used to cover it 5 or 6 days, 6 classes, the complete retail banking. Since it is, it's newly come to JIB, so we have started early. But otherwise, not to worry about that. This is easily can be managed. Even 2-3 days of study, you can easily clear this paper. Okay. Next is application of retail banking concept and distinction between retail and corporate or wholesale banking. Right? So, business structure in retail banking, there are 2 types of structure, horizontally organized model and vertically organized model. There are 2 types of model. One is horizontally organized model. Another one is vertically organized model. Okay. So horizontally organized model, that means each product will have a different people and process. For example, personal loan, you have a separate GM. Home loan, you have a separate GM. But in case of vertically organized model, right, it is based on the segment. Regional managers will be there. Most of the bank has got horizontally organized model. That means every region will have a regional manager for retail banking. They will handle it. The difference between retail and corporate banking. Retail banking deals with individual segment or customer. Corporate banking deals with corporates. Okay. Corporate banking deals with corporates. Okay. And retail banking is a mass market. Right? Corporate deals with corporate clients. Retail banking is a mass market banking model. Right? But corporate banking, small segment of business or corporate. Please remember, retail banking is B2C approach. What is B2C? Bank to customer. Bank to customer. This is B2B approach. B2B approach means business to business. Ticket size of retail banking is too small. Ticket size of retail banking is too small. 10,000, 20,000, 50,000, 1 lakh and all that. Corporate loans, 50 crore, 100 crore, all these things. Retail banking risk is widespread. Risk is widespread. That means smaller loan, even if it is default, we don't have a problem. But in case of a corporate banking, we have a big loan, any failure, we'll have a big problem. Right? Retail banking, the risk is, spread across multiple customer, multiple asset class, and the return also much better. But in case of a corporate banking, big customer, they will bargain bigger time, and the returns also low for corporate customer. Right? Cost of deposit is relatively small or less for retail banking. But in case of a corporate banking, it is high. Right. Okay. Retail banking, NPA may not be not profound. Not profound na வெளியில தெரியாதுன்னு அர்த்தம். No one knows. But in case of a corporate banking, the NPA is, more pronounced. Are you able to see the screen? Understand this? The difference between retail banking and corporate banking. Right. Retail banking has got has multiple products, multiple delivery channels, multiple customers. Right. So you can do a widespread. Widespread means you need not depend on a single product or something like that. You have a deposit, asset, and services, PPP, third party product. Third party product means mutual fund, insurance, etc., etc. Multiple delivery channel, branches, ATM, mobile banking, internet banking, etc. Multiple customer group, right? Retail customer, HNI, ultra HNI, MSME, etc. Okay. So multiple product, multiple delivery channel, multiple customers.
Sir, HNI means, sir?
High net worth individual. HNI means those who have more than 50 lakhs of deposit or mutual fund investment.
Sir, ultra HNI.
I will give the definition.
Okay.
Ultra, super ultra, all are there. I will give you the segmentation. That is called segmentation. HNI, ultra HNI, super ultra HNI. Right? This varies for the bank to bank. Some banks, the definition changes. Some banks, the different definitions will be there. Okay, every bank has got a different definitions. Okay, so I will give you normally what Indian banks will define this. I will also try what is there in as per RBI. Any classification is given. Retail, HNI. Okay. Right. Just give me a minute. There is a definition which is there. I will give you. Is there? 1 second. It will come in later part, but we will study now. Customer segmentation. Okay. So this is as per IABF, but you need to be careful on this definition because each bank will have different definitions on that. Are you able to see the screen? 2 to 10 lakhs mass market. Screen terida?
Yes, sir.
10 to 50 lakhs mass affluent. Affluent means they have money. 50 to 400 lakhs super affluent. 4 crore to 40 crores high net worth individual. Right? Then you have super high net worth, ultra high net worth. Okay. This comes in later stages of your subject, but we are seeing it now itself. Right. Here, what we have to look at is what are all the different type of customer segmentations we have. That is what we are looking at here. Right. Multiple product, multiple channels, and multiple customer groups. So we have a various models, horizontally organized model, vertically organized model, predominantly vertically organized model. Right? Right. Right. Already we have seen the difference between, wholesale banking and retail banking. Retail banking deals with a smaller customer. You can give a consumer loan, home loan, loan against property and all that small loan. Even NPA will not be, more pronounced. Retail deposits are more stable. The retail banking customers are not demanding much on interest rate like a corporate. Low cost of funds. Retail banking yield better result. It will give a good revenue. Low risk, minimum marketing efforts, right? All these things. So advantages of retail banking. First is cost of deposit is low, right? Customers are less demanding compared to corporate, right? Risk per customer is low. It yield better return compared to corporate banking. right? Less marketing effect. Converting one corporate, it takes lot of time. They will ask so many things. But in case of a consumer bank, easy to convert. Okay. So we have seen distinction between corporate and retail banking. Okay. Then we have also seen customer segmentations, etc., etc. Okay. So these first 3 chapters, introduction. Introduction to retail banking. Probably 2 or 3 questions only will come. But in 4th chapter, very new. Even last year CAIB, we don't have this chapter, right? So this is the first time they were introduced. It is called branch profitability. From this chapter, minimum 3 questions I am expecting. Maximum 5 questions will come on this particular chapter, which we are going to discuss. That chapter is called branch profitability. There may be a possibility you will have a sums also will come from this chapter. There will be a sums also will come from this chapter. So the chapter name is branch profitability, right? So I will teach you slowly. There will be a lot of formulas. You must remember. I will explain you once by one. All right. I will present the screen. Unit 4, branch profitability. Right? All of you able to see the screen?
Yes, sir.
Right. Unit number 4, retail banking. Very important chapter, huh? Very newly introduced. You will have a definite question on this. Huh? I will also give you the sums, etc., etc. Don't worry. Right. So branch profitability. Here we are going to talk about what is meant by profitability, what is profit, what is gross profit, ROA. ROA means return on asset, return on equity, branch operating efficiency, etc. Right? Right. Profitability, branch profitability. First, we need to understand profitability. Profitability is nothing but is measure of an organization profit related to expenses. All of us know what is meant by profit. Profit is the excess of income over expenses. That is called profitability. So profit is is nothing but excess of income over expenses. This is what definition. First, we will know what is gross profit. Gross profit is equal to sales minus cost of goods sold. In bracket, we put COGS. What is COGS? Cost of goods sold. This is the first level of profitability. Second level of profitability is operating profit. Second level of profitability is operating profit. Operating profit is equal to gross profit minus operating expenses. What is operating expenses? Operating expenses means rent, salary, advertisement, training, etc. Operating profit margin is equal to operating profit divided by sales into 100. Okay. This is a second level of profit. Third level of profit is net profit. Net profit is operating profit minus net profit. Net profit. Net profit is equal to operating profit minus depreciation minus interest minus taxes. Operating profit is called EBITDA. It is also called EBITDA. What is EBITDA? Earning before depreciation, interest and tax. So we will put earnings before interest, depreciation and the tax. So this is first one. Operating profit is second one. Then we have net profit is third one. So these are all, what is it? Explanation to this. So we will keep it like this. Okay. Is that clear? Right. Right. So basically, traditional measure of profitability is there are two components. One is return on asset, another one is return on equity. Traditional measures of profitability. One is return on asset. Second one is return on equity. What is return on asset? That is ROA. What is this ROE? Okay. Right. ROA means return on asset. Return on asset is determined net interest income, right? Earned on the asset. Income that earned on the asset, right? Return on asset is determined by the amount of that income earned on the asset. that is called return on asset. So first we need to calculate net interest income. First of all, we need to calculate is return on asset. So what is return on asset? That is net interest income divided by, that is net interest income divided by average total asset. What is NII? That is net interest income. Interest income minus interest expenses. Okay. Please remember, this chapter minimum 4 to 5 questions will come. ROA. Interest income will earned from all the asset. Okay. ROA, net interest income divided by average total asset. There is another formula also. Net interest income. There is another formula. This is the formula number 1. Okay. There is another formula. Return on asset. What is that? NII. NII means net interest income. Fee income. What is fee income? You will get it through mutual fund, selling of mutual fund, insurance, minus operating expenses. Divided by average total asset. Okay. This is called average total asset, means opening asset divided by closing asset divided by 2. Average plus closing plus openings divided by 2. Right? There is a concept called leverage ratio. That is nothing but asset divided by bank capital. There is a leverage ratio. Bank asset divided by bank capital. Okay. Next is return on RETU, or return on equity. What is return on equity? ROE is equal to return on asset multiplied by leverage ratio. That is net income divided by capital. ROE is equal to ROA multiplied by leverage ratio. So that is, we have what is called net income divided by return on asset is what? Average total asset is there, and leverage ratio, bank capital is there. So average total asset is cancelled. So we have a bank capital. Okay. Is that clear?
Yes, sir.
So I have not done much. It looks a lot of time, but I have given the formula 1, 2, 3. Gross profit, operating profit, net profit. Second one is operating profit. Third one is net profit. Return on asset, return on equity. Okay. These are all the critical, important formula one should know from this chapter. Okay. Right. So from this chapter, the formula is that's it. Right? Balance all theory, I will teach you right now. So these 5, 6 formulas you must remember. From these 5, 6 formula, 1 or 2 questions will definitely will come. Right. Next is operating efficiency, basically a channel optimization, business realignment, staff productivity, technology, product bundling, automation, customer care, big data, and all that, right? But now we will see what are all the factors affecting profitability of the bank. The factors. Affecting profitability of bank. One is, macroeconomic factor, industry specific factors, macroeconomic factors like interest rate, credit growth, inflation, etc. Second one is industry specific factors. Like RBI regulations, other bank specific factors, NPA, that is the bank specific factors, manpower, etc., etc. Right? How to improve the profitability? The, we can say the areas contributes profitability. So basically, how to improve, right? One is focus on profit, risk, growth. All three things are very important. You should grow your loan book at the same time profitable, less NPA. That is what we required, right? You should give more home loan with higher interest, right? Analyze the current customer base. Current customer base with deep penetration. Right? Exploring new market, customer, etc. Okay. Right. We also look at competition. Analyze the competition and effective marketing communications. Okay, so these are all the steps where we need to, take. So these are all the strategic steps. Then we also have good quality loans. We need to bring low cost deposit. High quality loans. Less NPA. NPA means non-performing asset. More quality loans which we are seeing. higher average balances. All right. In CASA. Right. So these are all the ways and means where we can improve the profitability of the bank or a branch. Right. The branch profitability improvement is not a one-time process. It is a continuous process. It is a continuous process. Right. Usage of technology. Technology to reduce operating expenses. Right. Technology. Okay, so this is what it is. So branch profitability, we have a gross profit, sales minus cost of goods sold. Cost of goods sold. Yes, ma'am. Hello. Okay. Next is operating profit, gross profit minus operating expenses. That is called EBITDA. Net profit is equal to operating profit minus depreciation minus interest and taxes. Return on asset, net interest income divided by average total asset. Return on equity, ROA into leverage ratio. Please mug up all these formulas. Net income divided by bank capital. So the areas contributes profitability are how to improve CASA, high quality loans, less NPA, good audit results. Right. So these are all the basic things we should do. Okay. So I will send you these notes. Very important chapter. The 4th chapter is. Okay. So I hope all of you got your economic notes, accounts and retail banking. I will send you on tonight or tomorrow morning. Okay. So we will stop with that for the day. Thank you so much. And please start preparing that. Okay. Any questions, any doubts? No questions? Okay. Thank you all. Thank you. We will catch up again on next week. Yeah. Thank you.
Thank you, sir.
Thank you.
sir.
Thank
Sir,
you.
నాಳೆ క్లాసెస్ ఇరుకాదా సార్?
నాளைக்கு இல்லம்மா. We will have a next week then class. Actually, every week we have a 4 days class. So this week we
Okay.
have a 3 days class because we are waiting for Principle of Banking book from IABF. So once it comes, we'll have a 4 days class.
ఓకే సార్. సండేస్ క్లాస్ కూడా కదా సార్?
Sundays illama. Sundays illa. We will see how we are progressing. Based on that, we will increasing it. As of now, it looks good. Only the volume is, Indian economic and financial systems. You have a huge volume. Otherwise, it's okay, manageable.
Next
Okay.
class epo, sir?
Next week, Tuesday, Tuesday, Wednesday, Thursday, Friday. These 4 days we are planning in it. Tuesday will be the accounts class. Wednesday will be the economic class. Thursday will be the retail banking class. Friday will be the principles and practices class. This week we are not having a class because that book is not released. So I'm just waiting for that. Probably it will come on tomorrow morning. They're supposed to come on today. It has not come. So once it comes, we have that class also.
ఓకే సార్.
Okay. So next week end, we will try to give you accounts and retail banking, the objective type question booklet. Okay.
ఓకే.
Thank you all. Thank you.
థ్యాంక్ యూ.
Thank you. Good night.